up to $100,000 with Wells Fargo. All right, so in today's video, we're going to talk about how you can get up to $100,000 with a personal loan with Wells Fargo. But before I get started, put first time in the comments if this is your first time here in my channel. Welcome to my channel where we talk about leveraging credit to create cash flow. We talk about finance and we talk about credit. All right, so what you would do is you would go to Wells Fargo. Obviously, you would click on personal loans, click on this. Now here's some pros, here's some cons with personal loans. The con is it's an installment loan, so the payment starts right away. It's a fixed term, 5 years, 3 years, 2 years. You start making payments the minute you borrow that money. The following month, you're making a payment. So that's the con, right? The pro is it's straight cash in the bank. You get if you're approved for 50,000, you get 50,000 usually within 10 to 15 minutes. Quick decision, same day decision. So that's the benefit, right? It's straight cash. You don't have to figure out creative ways to liquidate credit cards or things like that. So that's the pro. That's a real big pro. So the customizable loans, the minimum is 3,000 up to 100,000. Now, obviously, for you to qualify for 100,000, number one, your credit needs to be tier one. It needs to be tier one, and you need to have great income because those are the things that you're gonna put for submit when you put the application. You're going to put your income and you're going to put they're going to review your credit score, obviously. And then a DTI also factors in debt to income, right? If you have a lot of debt on the personal side, then you might not qualify. But that's best case scenario, up to 100,000. But anywhere between 3,000 to 100,000, flexible terms, 12 all the way up to 84 months, fixed interest rates, and relationship discounts for qualified customers. No origination fees, no closing fees, and no prepayment penalties. Let me explain what that means. No origination fees. A lot of companies, when they loan you out when they do personal loans, they'll charge you, it's a little predatory, they'll charge you an origination fee to originate that loan. Or they'll charge you a closing fee to, close all the documents, to prep all the documents. And then no prepayment penalty means that if you have a 5-year term and you pay it off in 2 years, they're not going to charge you. There are some companies that do that, that they'll charge you either a origination fee or prepayment penalty. I know that's kind of shady. I know Wells Fargo is not great. They got caught several times actually for doing some shady practices. They're not the best bank, but this is an option for you. The great thing about this particular product, you can do a soft pull. So they'll do a soft pull. It doesn't impact your credit score. Now you do need to be a Wells Fargo. You need to have a relationship with Wells Fargo in order to qualify for this product. So you would hit that, then you would sign in, or you put manual. I'm not going to go through the whole application, but you have to be a Wells Fargo customer in order for you to apply for this product. So you obviously need to open up a bank account. You need to have a relationship with Wells Fargo. For the best odds, for the higher approval odds, you want to season the account for a month, 2-3 months, put some deposits in there, and then apply for the loan. Or you could just open a business account. I'm sorry, not a business. Open a personal account and then do the soft pull. That way they'll tell you what you qualify as far as the rate. But before I continue, don't forget to subscribe, hit that bell notification. That way you get notified whenever I post a new video. Also, smash that like button, and put it in the comments if you ever got this product. What was your data points? What was your approval? What was the amount? And things like that. Obviously, you don't want to get this type of loan, this type of product, if you don't have, something lined up for you to invest into. You don't want to get into debt just to borrow this money. You want to have something lined up, something that can create cash flow, and or use it to debt consolidation, because personal loans have lower interest rates than credit cards. So you can consolidate your debt. If you have some credit cards on the personal side, you can get a personal loan, consolidate your debt. Instead of 5 credit card payments, you have 1 payment, and typically you have lower interest rate. Guys, let me know in the comments if this is something that you got. That's my time. My name's Tori Rosario. Peace.